Hey Nick, how are you?
Good. How you doing?
I'm doing great. Do you like my virtual background?
It almost looks like you're actually at Mostra.
Well, I thought it was appropriate because you and I usually do all of our meetings at Mostra. So I thought, you know what, let's just pretend like we're doing the same thing. I have my coffee, so I'm ready.
Nice. Very
Thank you
nice.
so much for hanging out with me this morning. I just wanted to just give everyone an update since we're all home and doing the virtual thing. Tell me what mortgage rates are looking like right now.
So the mortgage rates, we're still seeing historical lows. I mean, we've seen a lot of volatility every day. We're seeing rate changes from the day before. Next day, obviously, we're seeing more changes, and sometimes we're seeing changes within the day. So it's really hard right now to give an exact number, but we're still in that low three range to mid three range.
Okay.
We're not as low as we were prior to, I think the pandemic really setting in, which
Yeah.
would have been early March, but we're still really low. We're tracking lower, and I would say to people that it's the rates are still great. I think to hold out for something better could be foolish because we're seeing so much volatility that who knows, it could be a lot different in a couple weeks from now. But
Yeah. And
still
then
coming
I
in low to
remember,
mid
like
threes.
it was last week, you and I talked about the price, the cost of not acting now. And we'll
Yeah,
probably share that in another segment, but that's, kind of goes along with your message that, the rates are great now. And again, don't, count on it going any lower. So just you may as well act now, right?
yeah, absolutely. I mean, there's been so much change too. I mean, and one of the other things to cover is there's been a lot of change within the mortgage market beyond rates. I mean, as far as programs and things that used to be here 2 months ago or even a month ago have completely vanished. The jumbo landscape, so loan amounts, so San Diego specifically, anything over 701,000 and higher, you're in the jumbo space for loans, and that's changed immensely. There were a lot of programs that were created for like 10% down or just kind of hybrid things to kind of get people into homes in that jumbo category are like almost gone. And
Wow.
if they are still available, the rates on them are so ugly. It's like, why even bother? So
Wow.
the jumbo market's definitely changed. I do think it will come back, but I think temporarily it's kind of like push pause. Unless you're in that category of 20% down jumbo, it's like, wait. Or, I mean, there's definitely ways around it. And so we've strategized some ideas for people who still want to buy with like 10% down. There's
Hmm.
still ideas,
Hmm.
which, we could get into in a separate conversation, but it still achieves what they want at a low rate. So there's still options. I think it comes down to the desire. I mean, obviously the landscape's changed, and that's why it's important to be in touch with your people on the real estate side to strategize and figure out solutions.
Okay.
And then also the non-QM. So non-QM is kind of what we would consider today like subprime, or like the
Hmm.
stuff that is a little outside of the box. So like people who may not show a lot of income on their taxes, but they make a lot of money. So
Hmm.
there were like bank statement programs or programs for less than desirable credit. A lot of that stuff has changed a lot too, and a lot of the lenders that focus solely on that type of business. Some of them just said, "Hey, we're pushing pause. We're not going to do any lending for a month or two
Wow.
months."
Are you finding that with a lot of the big banks too, mostly?
A lot of the larger banks are still lending. I think they're focusing on their core product. They want the A paper, like
Yeah.
best clientele. I mean, over the weekend, Chase came out and basically said, hey, unless you have a 700 credit score or
I
higher,
saw that.
we're not going to lend to you. And they've got some other stricter guidelines. And honestly, there's nothing wrong with that. I mean, Chase is a great bank.
Mhm.
I have my personal mortgage with them. I probably shouldn't say it out loud, but I do.
It's okay.
That was a long time ago, but they do a great job. I mean, but the reality is they're seeing their business model change, and so they're saying, we're going to pull the reins back. We're going to be a little more conservative. So some of your larger banks are doing that. They're still lending. They still have great rates. But the credit box, so to speak, what they would do before is shrinking. So it's not as large as it used to be.
And then, when I reach out to my friends and family and former clients, the question I get most often is, or it's more of a statement like, oh my gosh, like I'm not going to pay my mortgage for a couple months. That will help me out,
Yeah.
And I'm like, wait, before you do that, make sure, for sure. So tell me what you are hearing about like forbearances.
Yeah, so that's the hot topic right now. I think a lot of people are like, well, shoot, the government's offering a forbearance option. I want to take advantage of it and I want the quote unquote free money.
Yeah.
Well, it's not, it's not free. That's
Nothing's
for
free,
sure.
right?
Nothing is free. Not, no matter how it gets disguised and presented. The reality of the forbearance plan is that, if your loan is serviced by Fannie Mae or Freddie Mac, which there's a way to look that up, and I
The way
can
to check,
show.
right? There's a
There's
website.
a there's a website you can
Okay.
go to and check, but I just tell people, look, call your servicer because they're going to tell you what options you have available, and they're ultimately the one that's going to facilitate it, anyways. But you can defer your loan. I'm sorry, defer or put in forbearance for up to 12 months with Fannie Mae and Freddie Mac's program. And then if you're not within those guidelines, you can do a shorter term.
Mhm.
But the reality of what's happening is all you're saying is, yeah, I can't make my payment this month. So I'm going to just defer that for 1, 2, 3, 12 months. And then whenever that duration's up, what we're seeing is that usually one of two things is happening. And there's probably a third option too. But the two most common is if you deferred three payments and your forbearance is for 3 months, at the end of that 90 days, they say, okay, well, if your payment's $3,000 a month and you deferred three times, that's $9,000. Well, at the end of 90 days, you need to pay us $9,000 plus your mortgage payment for the fourth month. Most people are going to be like, nope, I don't want to do that.
Yeah.
So the alternative option is we're starting to see now is maybe they're going to push out the term of their loan. So, let's say they have like 20 years left on their loan, and maybe they're going to tack 3 more months on at the end, and then just, and that to me, that's the more logical option. I don't see that happening the majority of the time, and I do anticipate at some point that will happen, because I think what's going to end up happening as a result is people do the forbearance because they have to out of necessity, because maybe they've lost their job and they just don't have the money to pay the mortgage.
Mhm.
Is at the end of that time, they're going to have this balance due, and they probably won't have the money to pay for it. Otherwise they wouldn't went into forbearance. So, hopefully by that time they went back to work, so they could, in essence, refinance that loan and wipe the slate clean, pay off their old loan, pay off the forbearance, and then just start a new loan.
Okay.
And I think what a lot of mortgage servicers are going to want to do is avoid a refinance, because when they get refinanced out of the loan, they lose that income, so to speak. So I think they'll ultimately figure out a way to make it more palatable. But right now, that's kind of what's going on. And what I'm telling people is, if you can pay a mortgage,
Yeah.
please do,
That's,
because
that's
save the program for the people who do truly need it.
yeah.
I know not everyone's lost their job or seen a reduction in income.
Mhm.
But there are people who have and do need to take advantage of the program, and hopefully, it'll. I think everything will work out the way it needs to, because we've learned our lesson as an industry and as a government from the '08 financial crisis. So I think we're
We're both
much better
around
shape.
that time.
Yeah, yeah,
Yeah, but that's what I'm telling people too, is like, if because fortunately, the majority of the people I've been reaching out to still have their jobs. They're just working from home, or it's
yeah,
modified. So that's what I'm telling people, is that if you can afford it, please pay it. Like again, like you said, just save it. Save that for people that truly, truly cannot afford to make their payment. Don't just think of this as like a free pass.
yeah. Because it certainly is not a free pass, and I think a few people have presented it in such a way, but it's 100% not a free pass.
As far as buyers, I mean, I'm telling buyers like, hey, man, this is like the best time to buy, because you've got less competition with other buyers. We're not seeing that complete frenzy anymore of like, multiple offers,
Mhm.
people bidding way over just to get in. So my question to you is like, what time frame should we expect for buyers for their loans? Like, what kind of escrows are we talking about, for buyers?
Yeah, it's all still pretty quick. I would second that notion that it's a great time if you are in the market to purchase a home. It's less competition, rates are still low. Like we talked about earlier, there's that cost of waiting to buy analysis I did, which we should do another video on, because that's good information, because you don't want to miss out on the rate. And I know people are concerned with home prices, but at the end of the day, we have to pay for a roof over our heads one way or another. So, anyways, we get off track. But to answer your question, it's still pretty quick. We're still doing 30 days or less. In some cases, we're getting 21-day contracts done, and there's not really a skip in the beat. I think everyone's kind of caught up now. There was a little bit of a time where we were transitioning to this work at home lifestyle. for the temporary and getting our systems built and designed. I think everyone's now acclimated, so I think now it's kind of like business as usual for the most part.
Mhm.
Appraisers seem to be caught up now. They're not backlogged like they were last month, and now they're really only doing exterior inspections for the most part. So
Okay.
that saves time. As far
Yeah.
as coordinating,
Yeah.
getting into a property and whatnot.
Yeah.
So I tell people still it's 30 days or less. It's still kind of more or less business as usual.
Yeah. And then for me, like, having a couple of sellers right now and trying to minimize the possibility of a buyer canceling because of a loan. For this particular seller, we really, really, really wanted to make sure that the buyers were completely qualified, that there was not going to be any no beats were going to be skipped at all. So,
Mm-hmm.
on that note for buyers, I recommend that they obviously reach out to you right away to get pre-qualified and to make sellers feel more comfortable with the buyers. Obviously it's sending the documentation, and I've worked with you forever. Like, you don't do anything without documentation, so that's never an issue. But one of the many great things about Nick and his company is that, he will actually, if I'm representing the buyer, he will go out of his way to talk to the listing agent to assure them that the buyer, is good to go, that there's not going to be any hiccups. And that really helps. It's just kind of more arsenal, in submitting an offer. So thank you for that.
Yeah. Yeah.
So, all right, cool. Thank you so much for your time. Again, if you have any questions, Nick, give them your phone number.
It is 858-774-3637.
And easy email, nick@mortgagenick.com.
Easy easy.
Cool. All right. I will talk to you soon.
Cool.
Thanks, Nick.
Absolutely. Take care.